Hi, and thanks for joining us. Great to have your company here on Kalkine TV. I'm Holly, and you're watching The Buzzing Trends. Today, we'll be shedding some light on the impact of the Omicron variant on aviation and travel stocks. While things have started to look optimistic after Australia lifted border restrictions, the surge in the Omicron variant cases has been casting shadows on the recovery of the Australian travel sector. The past couple of weeks saw a smashing rise in the number of COVID cases, with Australia witnessing over 500,000 in the past week. Although aggressive lockdowns and tough border restrictions have kept a check on infections in the past, the country is witnessing record infection cases in its effort to push through, as indicated by PM Scott Morrison. As a response to the massive surge in coronavirus cases, Virgin Australia has slashed 1/4 of all of its flights from its schedule in January and February. The staffing challenges and reduced demand have been the major factors driving this decision. Amidst the once again changing dynamics, all eyes are on the Australian travel sector that's been hit the hardest by the pandemic and is gradually making a comeback. So let's dive into how the Omicron variant is impacting these stocks. Well, the first one to look at is Qantas. Over the past few months, the boost in travel activity has partially offset the COVID-19 impact from the months of lockdown. Qantas had earlier highlighted that uncertainty regarding the Omicron variant slowed demand and momentum for both the domestic and international flights in November. The airline witnessed improvement over the Christmas and summer period. However, the company has indicated that Omicron is clearly impacting the confidence of travel, especially when it comes to booking international flights. The rising number of hospitalisations could also reflect the travel demand. Qantas is trading at $5.21 a share at the moment. And the next stock to have a look at is Flight Centre Travel Group. The COVID-19 pandemic has had a lasting impact on Flight Centre's operational landscape as more and more customers shift from brick-and-mortar stores to online channels. Driven by the growing relevance of the strengthening online presence, the company has acquired 100% ownership of Complete AI, a Texas-based business. The industry-first browser extension SHEP developed by Complete AI will be integrated into the company's FCM travel management business. And Flight Centre Travel Group is trading at $18.59 per share. Well, the last stock to have a look at now is Air New Zealand. The New Zealand government recently outlined a phased border reopening plan from early 2022, which will suggest a potential pathway to reopening the country for international travel. However, the rise in Omicron cases across the world has continued to impact these circumstances. With this in mind, Air New Zealand has indicated that it's been considering financial support requirements during the period up to the first quarter of 2022, when an equity raising is planned. The airline has entered into a revised Crown support package consisting of additional 500 million New Zealand dollars of additional liquidity, which would be better positioning the company during the period up till its recapitalization. At the moment, Air New Zealand is currently trading at 1.43 per share. And that is all for now on the Buzzing Trends, but we'll be back for more next time only on Kalkine TV. This is Holly Shields signing off.